Hello, ladies and gentlemen. My name is Greg Michalowski. Today's date is June 26, 2014, and I thought I'd take a look at the pound versus US dollars action today because there's some fundamental news that came out that forced the market higher initially and then lower. We'll take a look at the charts in just a second. So what were those fundamental reasons for the move? Well, the Bank of England's Carney and the Financial Policy Committee introduced two new measures to limit riskier mortgages and prevent excessive consumer debt buildup. The first was a limit on the proportion of mortgages at 4.5% times income to no more than 15% of the new home loans. So if banks have a new home loan, they have to limit their total loans outstanding to 15% to those borrowers who have a mortgage request of 4.5 times their income. The second measure they enacted was that banks must decline loans to borrowers who fail a stress test that assumes an immediate 3% increase in the benchmark rate. What Carney and the Financial Policy Committee is worried about is the vulnerabilities to the economy as a result of increased lending and specifically the lending for mortgages and houses. So what is that? How does that translate into movements in the pound versus U.S. dollar? And to start off, let's take a look at the 5-minute chart here. This is a 5-minute chart of the pound versus U.S. dollar. We saw the pound move sharply to the upside. Now the market stopped at around the 170.38.7, in fact, right at that level. And I have a horizontal line coming across here at 170.41. Why? Well, that line was came from the weekly chart, and if you go to the weekly chart and you look back in time, going back to 2009, the high price going back to August of 2009, 1.7041. So today, when the market went up to test that 1.741 level and hopefully try to get above that level, it couldn't. The market fell off of that level. The initial move to the downside took the price down to the 38.2% retracement of the move to the upside here. We saw a minor little bounce, and then we fell below that level and found support against the 200 bar moving average on the 5-minute chart here. Also have support against this horizontal line right here. This is another green line here. What does that line represent? That represents the 200-hour moving average. And so if I go to the hourly chart and I zoom in here and look at the decline to the downside, where did the market stall out? Right there in front of the 200-hour moving average at the 169.95 level. There's a third reason why the market stalled out down here, and that comes from taking the low from the week, which was reached yesterday, Wednesday, and the high off of that low, so the high today, and the 50% retracement comes in at that 169.95 level as well. So we had real good reason to find support here. We had real good reason to find resistance up here, and the market ping-ponged in between that resistance up here and the support down there. Now, where do we stand now? We stand right in the between resistance up here and support down here, trading at the 170.18 level, being above the 100-hour moving average, being above the 200-hour moving average at 38.2, and the 170 level is probably a good thing and a bullish thing. And not only that, we've been moving higher here today, so the bias remains to the upside. We had a little scare when we came down, tested support, but the market is finding buyers now in the market, and that would suggest that perhaps the next move is to retest that 170.41 level, see if we can get above that level and continue this rally to the upside. The high price for this year came last week at the 170, well, I think it was 61.9 level. That was a high price, and that would be a target if we get above the 41 level. And above that level, looking at this daily chart connecting two most recent highs, this trend line comes in at the 171.04 level. That would be another target on the top side going forward for the pound versus US dollar. A move above those levels, and I wouldn't put it out of the question that the market can go and test a 50% retracement of the move down from the 2007 high down to the 2009 low. That 50% comes in at 173.31. That's longer term. That's down the road. So don't. In order to get there, we still have to get above these resistance levels that I've just outlined here on a daily chart. So there you have it. A look at the pound versus U.S. dollar, and a little explanation of what is moving that currency pair here today. My name is Greg Michalowski, and this has been a video brought to you by Greg Mike FX.